Hey everybody, Scott Cole here. I just wanted to provide a quick example of the kinds of things I've been working on for a number of years in regard to developing a trend following program for trading in the futures markets. So many years ago, one of the things that I learned was a trading approach to trading futures known as trend following, and I learned what's basically known as a pretty famous trading system known as the turtle trading system, and you can look that up on the internet to find out the story behind that. But so what I'm going to do is I'm going to conduct a test, two tests, both on a $250,000 portfolio going back 20 years. The first test is going to be with turtle trading system number 3. And basically that combines a couple different strategies into one. And we're going to go back 20 years. And in both cases we're going to risk 1% of our equity per trade. And we're going to go back about 20 years, like I said. And at the bottom of the screen you can see that the program is starting to run. So this will take a couple minutes to run through the test, and then we'll see the results. So I'm going to go ahead and pause the video here, and then we'll have a look at the results real quick. Okay, so we're just about done with the test, and we're going to get these results momentarily. And this system basically buys and sells channel breakouts. So if a market makes a 55-day high or 20-day high in price, then we're going to enter a long position. It just depends on exactly which system we're going to be using at the time. The longer version is buying the 55-day high, and then we would exit the trade if it once it makes a 20-day low. And there's also a stop loss provision in this system. The shorter system buys and sells 20-day breakouts and has a 10-day trailing stop to exit the position. And there's also a filter involved with that system that eliminates some false breakouts. At least that's what it attempts to do. So that might be all Greek to you, but that's stuff I could explain to you in person or in another document sometime. I've written extensively about the turtle trading system on my websites that deal with trading. So with that said, so we've gone back 20 years, and let me just show you our very first trade is January 3rd, 1995 in the Japanese yen. And the cool thing about this Trader Studio software program is it will provide you a lot of details with exactly what your trading system that you're trying to test is doing. So as we move along, we're buying and selling different numbers of contracts depending on the market, depending on that market's volatility and the contract specifications for that market. And we can see what we did on a monthly basis, our profit and loss, quarterly, and annually. So if we look here, we can see that this particular system is relatively inconsistent. For instance, in 2005 it was down 32%, but in 2008, when we had all of that financial crisis going on, the system was up over 100%. And basically that's what trend following tries to capture, is those big moves that happen when there's dislocations in the financial markets. So what we're going to do next, let me show you this as well. So the compound annual growth rate for the system was 7%, but we had a maximum drawdown of over 70%. So basically what that means is if our peak equity was at $100,000 and our maximum drawdown from that level was 70%, then your equity would decline all the way down to $30,000. So that's basically what that means. So what we're going to do next is I'm going to go ahead and test my trading program, which is basically the culmination of all of my research and study in the markets, and I use some similar concepts as what you've just seen in the turtle trading system, but there's some differences in the makeup of the portfolio and the core trading strategies. So I'm going to run that test. Again, we're going to risk 1% of our equity per trade, just to kind of keep things balanced as far as our comparison. You can see at the bottom that the test is running at the bottom of the screen. So we're going to pause the video again, and we'll get back when the results are in. Okay, so as you can see at the bottom of the screen, we're about done with the test, and we should be getting these results back here in a few seconds. And you're going to see that there's some pretty significant differences in the performance between the trading program that I've developed and the old turtle trading system. So just for the sake of comparison, so here the cumulative net profit from my models has generated almost 29 million, and I still have an open trade position of $38 million. Of course, this is not considering any taxes that you would pay or anything like that. So let's just compare that to what the turtle trading system did, where it only had a total net profit of under $400,000 with starting equity of $250,000, and the open trade position is $340,000, a little bit under that. So that's our direct comparison there. Now let's go to the yearly difference, and as you recall, the turtle trading system was pretty inconsistent, and it had some losing years going on there. But you can see that the program I've put together in its testing, remember this is all hypothetical, has generated positive returns every year. And you can see already here in 2015 the markets have been going pretty crazy. Here in the January we're already up 21%. So what's probably going to happen with a trend following program such as this is some of these markets are going to start moving in the other direction because they're getting very extended in their existing trends. But that's the nature of trend following. So let's go to the next. Let me just show you the trade by trade. So our first trade here, this is the Euro-Swiss contract. It's a 3-month interest rate contract traded over in Europe. The first trade there is January 1995 when we bought 2 contracts there, and then we sold them the next day at a loss. So that's the kind of information that you're going to get. Each individual trade, the particular strategy that was employed, and all that stuff. So now here's some important information here. Again, we started with 250,000. These are the portfolios and strategies that were employed the way I labeled them, and we had a compound annual growth rate of 32%, and our maximum drawdown was just under 28%. So that's pretty strong performance for a trend following system, and that includes commissions that were paid, as you can see, and I tried to keep those commission rates and slippage consistent between both of these tests. So we can also go back and just compare again the major differences between these two strategies. You can see that with turtle system number 3 we actually had more losing months than winning months, whereas we had the opposite with my trading program. So I just wanted to give you a little bit of a taste of what I've been able to do as far as my testing. Any money manager that's going to put money at risk is going to go through a process where they're going to test their strategies and ideas and then put them in a portfolio. I'm using a software program developed by Murray Ruggiero, who is a contributing editor to Futures Magazine, and he's spent a lot of money developing this software program. So I think it gives you some pretty accurate results, I would place my confidence level pretty high. Not quite 100%, but I would put it pretty high that putting this program together, we would, over the last 20 years, we would have generated some reasonably similar results. This does not take out any kind of an incentive fee or management fee that a professional trader would charge, however. Typically those fees are 2% management fee and 20% incentive fee. But in any event, this program has been very useful to me. I've been able to test out a lot of ideas over the last couple years, and I'd be happy to share with you some more information on these ideas and thoughts down the road if you're interested. So thanks for watching this video, and we'll see you down the road.